In this question number 8, we need to apply 10% on reducing balance method with proportional, that is monthly. Look at here, 2013 and 2009, we have two assets, 400 and 600. For 2009, we need to apply 10% on 400 and 600 monthly. Monthly means you need to count the months. It's July. No need to count months for January. You need to count the months for July. So July to December, how many months? December is our year end. 6 months. 6 over 12. So this makes it 40. And this one will be 30. It becomes 70. Is it agreed to everyone? Now for 2010, how many assets we have in 2010? There are 3 assets now. One is added. So total become 3 assets. It is reducing balance method. 10% is to be applied after subtracting 40. After subtracting previous depreciation. Kindly verify it is reducing balance method. You need to apply depreciation after subtracting the previous depreciation. That is to be 570. It becomes 57. And the new asset 500 added on April. 500 added on April. From April, how many months? From April, how many months? 9. Calculators, answer. Perform your calculations. 37.5, or we may say 38. Total become 131. Kindly check the total. Check the total. Now I want to pass the double entries. For 2010, for 2009, the double entry will be income statement debit, accumulated depreciation credit with a value of 70. And for 2010, income statement debit, accumulated depreciation credit 131. It will remain same. Every year we need to pass the same entry. Every year we need to pass the same entry. Income statement debit, accumulated depreciation credit. Income statement debit, accumulated depreciation credit. Is that agreed to everyone? Very nice. Today my target is T accounts. Look at the T accounts. You are supposed to make machinery account and provision account. Look how to make machinery account and accumulated depreciation account. As you know, every non-current asset has its separate account. For example, furniture has a separate account, building has a separate account, machinery has a separate account, motor vehicle has a separate account. For 2009, how many assets we have in 2009? So we have 2 assets in 2009. Here we have the assets of 2009. So 2009, first January for 400, machinery debit, cash credit, simple double entry. If you buy a machine, machine will be debit. The cash will be credit or bank will be credit. Whenever asset increase, debit. Machinery is purchased, machinery is coming in, machinery is increasing in the business. There are two assets on 1st Jan and 1st July, again against cash with a value of 600. That's all. Accounts close, balance is transferred, balance carried down, and balance brought down. The same way, balance carried down and balance brought down. It was transferred from 2009 to 2010. What happened in 2010? Sir, another asset purchased for 500, and this time it was purchased on 1st April, again against cash on. That's all. Accounts close, balance is transferred, it will be transferred, balance carried down and balance brought down. Simple way. So balance carried down and balance brought down. As we do it, we always do it. Is it agreed with everybody of you? And the next account is accumulated depreciation account. Here I already passed the double entries: income statement debit, accumulated depreciation credit, income statement debit, accumulated depreciation credit. There is only one entry to pass every year for depreciation, and these double entries are passed every year at the end of the year. The calculation of depreciation is made at the end of the year. So the double entry is always passed as the end of the year. So here we go for the account. The first year is 2009, $2009, $2009. Double entry: income statement debit, accumulated depreciation credit. Say accumulated depreciation credit, accumulated depreciation credit because of income statement on 31st December. That's all. Accounts closed, balance is transferred, balance carried down, balance brought down. Now it is 2010. Now in 2010, double entry is income statement debit, accumulated depreciation credit, accumulated depreciation credit with a value of 131 because of income statement on 31st December. That's all. Accounts closed, balance is transferred, balance carried down, and balance brought down. So this is the same way to do all the question. The simple asset account: whenever asset increase, debit, debit, debit. When asset bought, debit, debit, debit. Carried down, brought down, carried down, brought down. And whenever asset depreciate, every year it depreciate, always credit. Opposite of asset. Accumulated depreciation is the opposite of asset. Asset always debit, depreciation always credit. Accumulated depreciation is always credit. It has a balance brought down on the debit side, it has a balance brought down on the credit side. All right. Thank you. This is a very interesting question, question number 10, where we have to apply all three methods. That is straight line method for building, reducing balance method for plant and equipment, revaluation method for loose tools. Here we go for the question. You are supposed to calculate for 2 years, 2015 and 16. So you need to apply the date first, 31st August 2015 and 31st August 2016. We need to apply 5% for building, The land costs 70 and the building costs 50, and land should not be depreciated. Land should not be depreciated. So we need to apply 5% directly on 50,000. Calculators, and you need to use dollar sign. Always, whenever there is a question of calculation, do use dollar sign. Don't forget it. Examiner will deduct the mask. This is a straight line method. In the next year, we need to apply the same, and the result will be the same. It is a straight line method. It is a method where amount of depreciation will remain same. Every year percentage is to be applied on cost, and every year same answer. Let me go towards the plant and machinery. On plant and machinery, we need to apply 40% diminishing or reducing. Same meaning, sir. Again, you need to raise the date first. 31st August 2015, 31st August 2016. Here we go for the 40%. This is 40%. Yes, sir, it's a 40%. And the value of plant and machinery is 60,000. Here we apply 40% on 60,000. It gives us 24,000. Kindly use your calculators, every one of you. Kindly use the calculator. Since it is reducing balance method, you need to apply next year not on 30 or not on 60,000, but on 36,000. This is reducing balance method. Reducing balance method में minus करने के बाद percentage लगती है. Under straight line method, हर साल 50,000, हर साल 50,000. But in reducing balance method, you need to subtract. Apply 40%, give me the answer, 14,400. Everybody of you. So this was the reducing balance method. I hope you understand it. Let me move towards the revaluation for the first time. We are working for the first time on a revaluation method. Let me remind you the formula to calculate depreciation under loose tool. The depreciation should be opening value of the asset plus any new purchase minus closing value. Here we go again. You need to apply the date first. Let me see them. The loose tools. We had a loose tool of 5,000 at the start of 14. Then what happened with the loose tool? Look at here, loose tools, loose tool information. Here we have the loose tool information at the start of the year. At the start of the year, I just marking the revaluation. I'm just marking the revaluation. Right, Sir G? It was 5,000 at the start. This is the opening value. Right? Is there any purchase during 14 and 15? Yes, there is a purchase of 1000 and ending value is 4500. 5000 was the opening, 1000 is the new purchase, and the closing value is 4500. Kindly look at the question carefully. The opening value was 5000, the new purchase was 1000, and the value remain at the end of the year is 4500. Kindly calculators. 1500 is decreased, it becomes the depreciation. The value which is decreased is become the depreciation. 5000 के एसेट थे, 1000 के और खरीदे, तो ये कितने होने चाहिए? 6, लेकिन आपके पास सिर्फ कितने बचे हुए? 45. 6000 होने चाहिए थे, सिर्फ 4500 remaining है. That means whatever you don't have is become lost, maybe destroyed, maybe theft. So it's become depreciation. In the next year, the opening value is 4500 and the ending value is 3400. Calculators. Calculators. It become 1100. Kindly verify from your calculators. This is the way to do it. This is very important question where we use a straight line method, reducing balance method, and revaluation method. All three methods are applied in this question. It's a very interesting question. The same type of question we have in our past paper. I want you people to do it with me. Here is a past paper analysis, and here is a question of June 2004. What examiner asked? 17, question number 17 in a normal booklet. And the first past paper question, this is 18-mark question. June 2004, it was a question number 4 and for 18 marks. It asks you for the theory of all three methods. Sir has provided, in the last lecture, sir has provided the theory. Straight line method, reducing balance method, and revaluation method. Kindly do it. Need to copy or need to see it somewhere? Not good, not good at all. We have to learn the theory. You have to learn the theory. Under diminishing balance method, the amount of depreciation is decreased each year. Percentage is applied on net book value. You need to do it yourself at home. Under straight line method, amount of depreciation will remain same each year. Percentage is applied on cost each year. In the revaluation method, it is a method where depreciation is calculated by taking the difference. The 2 marks definitions. Okay, next. They ask you to calculate depreciation for year 1 and year 2. For year 1 and year 2, the same style of question. Just we did. For 2015 and 16 we did. Here year 1 and year 2. For computers, for office furniture, and for loose tools. Here we go. Year 1, year 2. What they said for computers? They said us for computers, Computer is 20,000. Diminishing balance method 60%. Shall we start? Kindly do it. 60%. 60% of 2,000. Everybody kindly use your calculators, verify. This will be 1,200. This is diminishing balance method, reducing balance method. So kindly subtract, then apply. 60% on 800, and the answer will be 60% of 800. This is 480. Kindly verify. This is 480. Kindly use the correct calculators, correct calculations. Now, office furniture, year 1 and year 2. $3,000 was the cost. Straight line method, 10%. No issue, sir. Under the straight line method, percentage will remain same. It is applied on the same cost every year. It is to be applied on same cost every year. It will give you the same result. This is a straight line method applied straight. Kindly compare the difference. Reducing balance method, amount of depreciation is reduced, applied on reduced value, whereas office furniture, percentage is applied on cost. Each year on the same value, same results. Let's try for the next one. The revaluation method is to be applied on loose tools. Assume the value at year end 1 is 600, year 2 is 350. The end value they have given us for year 1 and year 2. What was the starting value? We need the starting value also. Starting value was 800. Revaluation method. Now kindly apply from 800 to 600, then from 600 to 350. There is no addition. 800 to 600 and 600 to 350. Is that agreed with everyone? So nice of you, so nice of you. Kindly do practice these practice questions. Inshallah, next time in the next lecture, we'll see the disposal. Thank you very much for being with us.